The U.S. economy is contracting with tens of millions of Americans filing for unemployment benefits. Amid the COVID-19 crisis, how can the U.S. reboot its economy while bringing the pandemic under control? And a new BBC documentary is bringing an ancient Chinese poet to a Western audience. Who is Du Fu, and why is his poetry considered quintessentially Chinese? Welcome to The Point. I'm Wang Guan, sitting in for Liu Xin. The U.S. economy shrank by 4.8% in the first quarter, the steepest slide since the 2008 financial crisis. Unemployment has skyrocketed, with more than 30 million Americans filing unemployment claims since mid-March. Meanwhile, the White House is beating the drum for reopening the U.S. economy, as many states are actually scrambling to contain the virus. What are the challenges of reopening the economy? Is it a foregone conclusion that U.S.-China cooperation and U.S.-China relations will continue to get worse in the run-up to the U.S. presidential election? Joining our discussion tonight from New York via Skype is Max Wolff, founding partner of Multivariate Solutions, a financial consulting company. And in Beijing via phone is Professor Gong of economics at the University of International Business and Economics. Welcome, both of you. Mr. Wolff, I would like to go to you first. First of all, your assessment on the state of the U.S. economy. What are the sectors and people that are most vulnerable?
Sure, so a pleasure to be here. Thank you for having me. I think, unfortunately, there's very little good news about the U.S. economy, and maybe even more unfortunately, there's a lot of people who seem to think the story is good, which is particularly bad when it's not. So I think the 30 million unemployed is a good place to start. So 30 million people have lost their jobs. They're newly unemployed in the last month, and that's in a situation where we know that what's happening is the ability of various states and municipalities to process claims is the 30 million. So 30 million claims processed, but we know that the average person getting through on the phone or on the internet is trying for 5 to 6 hours because the volume of calls or online inquiries is so large that some fraction, it's hard to know how much, but some fraction of the people trying to get an unemployment claim through are actually succeeding. So we know the number is much larger, probably over 45 million folks. And unfortunately, every Thursday we get these sort of grim updates, and then this Friday we'll get the look back update. In terms of the GDP number, it was obviously terrible, so loss of almost 5%, but we also know that those numbers are incomplete, and they really only go through the first part of March, which was kind of before the storm. So we know they'll be restated upward. And the big really kind of concern for us is the second quarter, a quarter in which it's now pretty clear, or at least a two-quarter period in which the U.S. government will borrow about $3 trillion in an effort to sort of prop things back up. So I'd look at what they do, not what they say. If they think there's at least a $3 trillion hole, then that's probably true, and that's a pretty big hole since it's about 1/6 of the total economic activity.
Well, Mr. Wolff, talking about this Friday's job report, economists surveyed by Wall Street Journal's forecast that unemployment rose to 16% in April, and 22 million non-farm payroll jobs were lost. To what extent do you think these numbers reflect situations on the ground?
Yeah, so I think there's two different things. One is to guess what our official numbers will be. The other, probably more productive one, is to guess what's going on here. Our official numbers are designed to make the unemployment problem look smaller, which they'll do. So, for instance, we know that more than 30 million people have successfully applied for unemployment. So we know that more than 30 million people who are eligible have lost their jobs. There's probably about 20 to 25 million that'll show up in that numbers. And we're going to see official rates of unemployment, what's sometimes called the U3 number, go from about 4%, a little bit south of 4%, where they were, to somewhere north of 15%, right? And so I think the real story here is we've had an entire 3 or 4 month wind down into a severe recession, and it's occurred in 5 or 6 weeks. And so we're going to have to learn the hard way exactly what that means, but probably doesn't bode well for next month either.
Well, Professor Gong, what do you see as the biggest challenges the U.S. economy is facing? And to what extent do you think these unemployment numbers, GDP numbers, reflect actual situations on the ground?
Well, first, let me address your second question. I think the numbers announced so far are not the best news yet. Because we are getting into a very bad economic situation starting from somewhere in March and already seeing a minus 4.8% GDP loss. But I think the worst is clearly in April and I think going to May hasn't really changed much. So I think the second quarter number is going to be even worse. That's the bad news. But I think the good news is that I don't see this as being dragging out for too long. I think as the weather gets warmer, it's going to be wrapped up pretty fast. And that's first thing. Second thing is that going into this, the U.S. economy is still pretty strong, in my opinion. At least the corporate balance sheet's been very strong, in my opinion. So I think we're going to see a quite fast recovery. People have been talking about, the 1930s depression. I don't think it's that going to be the case. I think what's happening right now in the United States is that it's being hit particularly hard because, after all, the U.S. is very much a service-oriented economy. Over 85% of the U.S. GDP is attributed to service. And as we know it, service is very much susceptible to this kind of lockdown measures. Things are pretty much grinding to a halt. Nothing's happening. And, of course, the service sector is being hit particularly hard. But as I said, I think we're going to see a very fast recovery as this virus at least going to disappear during the summertime. Hopefully, that would be my prediction.
Well, Professor John, if you look at the U.S. stock exchange, the major indexes, they have largely, came back from their earlier losses. I mean, not completely, but the Dow and S&P 500 regained almost half of their previous losses. Do you think there's a disconnect between the financial economy and the real economy in the U.S.?
Well, the disconnect between the financial economy and the real economy has always been the case. I mean, the financial market is a leading indicator of what's going to come. It's not surprising to me, and it's actually a non-exception that the stock market is one step ahead of the real economy. And also I think there's a lot of supply of capital in the market right now. For the last few years, the U.S. economy has been doing fairly well, in my opinion. There's also a lot of gains from the stock market over the years. So the capital is looking for an exit, looking for a place to put their money on. And if you look around the world, there are not many places as I would say, as safe, as promising as what the equity market in the United States promises. So, I think the Dow didn't have a large loss in the first place. I think it's about 20 to 25% in the first place. It's not much of a big loss, in my opinion. And second, that it's been recovering pretty fast. So I think overall, people are still quite rosy about the U.S. economy moving forward.
All right. Mr. Wolff, how do you look at the U.S. government's bailout plans to businesses and subsidies to individuals?
Sure. So, I think but part of the market's been propped up by $3 trillion delivered, $7 trillion promised. And since the entire market is really only about $40 trillion in capitalization, it's an enormous bailout. I think the problem that we have here is that when you water the leaves and the roots dry out, the tree keels over. And we've been watering the leaves at the expense of the roots for a while. Now we're in a crisis, which has revealed the sort of bad shape the roots are in. And we've decided to water the leaves again. So I hope my esteemed colleague is correct, but I don't really see it the same way. Let me give you a couple examples for why I don't. I do think that the multiples are at historic highs in the U.S. stock market, and earnings are rapidly falling. And in every other recession we've had, which would be the best case scenario, the multiples have come down and the earnings have come down less. And so that suggests we're 40+% overvalued right now. I also think we're reopening the economy because we've sort of given up on saving 70 or 80,000 lives. I'm not sure that's going to play well politically here. And I also, in my esteemed economics study, the dead and the sick make for mediocre employees and reluctant consumers, which is part of the reason we close things down in the first place. And then the other piece I sort of think is pretty essential here is we don't have any coordination. So the federal government is not guiding us. Much of the information they give us is incorrect. The states then make their own decisions and they make different decisions. And so things are abnormally chaotic. And I'll give you one example of why that makes us less resilient. Unfortunately, I'm afraid, hope I'm wrong, but about 30% of American small businesses seem to have failed because they didn't get help, it took too long, and they didn't have enough reserve, right? right? I think our tourism economy, which is very big here, like all those around the world, not just ours, is going to be in for a very slow, painful, long-term kind of recovery. And I think what we buy and how we buy it is in the process of changing, and not always for the worst. I think there's more than good scope for eventual, very strong recovery, but I don't think it comes this summer. I don't think it comes in 2020. And I think we have to start doing a much better job to be likely to anticipate a really robust, sustained sort of comeback for 2021. Sure, there'll be a bounce on relief, but a bounce is not a recovery.
Well, Professor John, when you look at this massive bailout plans, sending direct checks to individuals, to what extent are you worried about the fiscal health of the U.S. Federal government? Last time I checked, the U.S. federal debt stands at $24 trillion, a lot more than its GDP.
Well, I mean, the U.S. government, federal government's debt problem is notorious, and it doesn't actually get a little bit worse than it already get. But the U.S. government doesn't have a choice here. I mean, millions and millions of American families are really having a problem right now. I mean, you're talking about over 30 million people who don't have paychecks anymore. And I think the American households are very different from the situation here in China, because I think the family bond is not as strong as in China, for example. And, a lot of people also are still renting. The saving rate is notoriously low in the United States. A lot of people live check by paycheck. There was a study early on saying that 40% of American families would have difficulty just to cough up something like $400 on an incidental basis. So these families really do need help. Otherwise, the food on the table, shelter would be practical issues here. And I think the U.S. government is doing the right thing to giving out these paychecks, these welfare checks. Really, they do have. They do need help here, but I from a federal government's deficit point of view, I don't see an immediate default problem. I mean, U.S. government's bond rating is still pretty strong, and it will keep issuing debt. That I don't see a problem. But I do worry a little bit about the implication for inflation, as we go down the road. They're issuing a lot of, printing a lot of money. The balance sheet is at the Federal Reserve banks keep expanding. The debt level. So that would be a problem. But I think in the short run, that's the only thing the federal government can do, and it's the right thing to do, actually. Fiscal policy is exactly appropriate for a moment like this. The United States government need to do something like this to prevent the economy from spiraling down into a deep recession. And I also want to add that historically, the economic performance right after a pandemic like this was actually pretty strong, to a lot of surprise to a lot of people. If you look at the U.S. economy performance in the 1920s, right after the Spanish flu in the 1980s and 1990s, it was a very good year. It was a very good period of 10 years of economic growth. And some economists have been attributing to the Spanish flu, the growth in these 10 years after the Spanish flu, attribute this to the Spanish flu. And as we economists looking at the numbers, typically after natural disaster, and this is being a natural disaster, the economic performance tend to be quite strong. I think it's debatable when are we coming back to recovery, whether it's going to be the latter half of 2020 or going to be 2021. I mean, it's debatable. But nevertheless, it's going to be an issue of 1 or 2 years. But after that, it's going to be, in my opinion, it's going to be a period of a pretty strong growth after we wind up this very sorry pandemic.
Right. Mr. Wolff, do you share Professor John Gong's optimism on the outlook of the U.S. economy, also the economic recovery? And what would you add to that?
So I wish I could. I definitely pretty much 100% do not. I think we were in a period of growing deglobalization and the kind of cessation of lots of free trade relationships on which modern prosperity is built. I think that's decelerating. So I think we've got a worsening of that problem, a lack of international coordination. We have a near total failure of our federal government to manage the storm here, which is part of the reason that we have so many more infections and so many more deaths than everywhere else. We also have a healthcare system that's clearly not up to the task. And I think, unlike a lot of natural disasters, when the dust settles on this, we're going to have at least 200,000 people who've probably died, several million who've gotten sick, a third of our small businesses fail, faith in the government be undermined, and international trade be tattered. And every economic model I've ever seen, studied, or taught suggests those are kind of more structural in their impact. I do think that some parts of the world will do much better than us. I certainly hope we do better than my present forecast. But I think there's also an issue, which is at some point, economic distress leaks over into the political realm. And I fear and hope we avoid that, but I think we might not completely avoid it this time.
Well, I think we'll have to agree to disagree over there. That's all the time we have, I'm afraid, gentlemen. Thank you so much, Max Wolff, and also Professor John Gong. Thank you.